ก่อนที่ปุ้นจะพาทุกท่านเข้าไปสู่เนื้อหาของคลิปแล้วก็พบกับคุณแอนดรูว์สตอร์นะคะปุ้นอยากจะใช้ช่วงเวลาตอนต้นนี้กล่าวขอบคุณทุกๆแรงกำลังใจนะคะ subscriber follower และที่สำคัญอย่างยิ่งลูกค้าทุกท่านที่ให้โอกาสปุ้นในการวางแผนการเงินแล้วก็ซื้อผลิตภัณฑ์ทางการเงินต่างๆที่ตอบโจทย์กับแผนการเงินนั้นๆนะคะช่องMeeMoneyเนี้ยมาไกลเกินกว่าที่ปุ้นคิดเอาไว้ตอนต้นมากๆนะคะเพราะตอนแรกเองก็ไม่มั่นใจว่าเนื้อหาที่ทำออกมาเนี่ยจะเป็นประโยชน์กับทุกท่านมากน้อยแค่ไหนนะคะแล้วก็ขอบคุณอีกครั้งสำหรับกำลังใจที่มีให้แล้วก็ฟีดแบ็กที่ให้กลับมานะคะโดยที่ปุ้นจะมี Special Episode นี้กับทางคุณแอนดรูว์สตอร์นะคะทั้งหมด2 EP ด้วยกันโดยที่วันนี้จะเป็น EP แรกนะคะเดี๋ยวน่าจะไม่เกินสัปดาห์ถัดมานะคะในวันที่ EP นี้ออนเนี่ยปุ้นจะลง EP ที่2ให้ขอเล่าถึงจุดเริ่มต้นก่อนนะคะก็คือว่าคุณแอนดรูว์เนี่ยเขาดูแลคุณแม่ที่อายุเยอะมากๆนะคะปุ้นเองสนใจว่าทางคุณแอนดรูว์กับคุณแม่เนี่ยจัดสรรการเงินยังไงแล้วก็มันน่ากลัวแค่ไหนที่จะต้องดูแลผู้ป่วยสูงอายุมากๆอะไรอย่างเงี้ยค่ะค่าใช้จ่ายแต่ละเดือนทั้งคู่จัดการยังไงอะไรอย่างเงี้ยค่ะโดยที่ EP แรกจะเป็น EP ของคุณแอนดรูว์ก่อนเกี่ยวกับ personal finance นะคะ EP ที่2จะมีคุณแม่มาร่วมพูดคุยด้วยนะคะหวังว่าทุกท่านจะได้แง่คิดเกร็ดความรู้จากทั้งคู่ไปนะคะปุ้นว่า EP คุณแม่เป็น EP ที่น่าสนใจมากเพราะว่าหนึ่งในความกลัวของคนรุ่นใหม่อย่างเจนอย่างของปุ้นคือส่วนตัวของปุ้นเลยอะเกิดจากการที่เรารู้ว่าอีกหน่อยคุณพ่อคุณแม่เราจะแก่ตัวลงนะคะเราต้องดูแลท่านคำถามคือเราจะดูแลท่านยังไงมันต้องใช้เงินเท่าไหร่นะคะอันนี้เป็นจุดเริ่มต้นของการที่ชวนคุณแอนดรูว์กับคุณแม่มาคุยกันให้ฟังนะคะใน Special Episode นี้นะคะก็ขอบคุณอีกครั้งสำหรับทุกๆกำลังใจนะคะอย่าลืมติดตามดูทั้ง2 EP เลยนะคะเพื่อไม่เป็นการเสียเวลานะคะเราไปดู EP แรกกันก่อนเลยค่ะไปเลยค่ะ All right, it's another exciting video for me. So before I talk to you, Andrew, I'm gonna say hi to the audience first in Thai, and then I will get back to you later.
โอเค
ก็สวัสดีทุกคนนะคะขอต้อนรับกลับเข้ามาสู่ช่อง MeeMoney เนาะคือปุ้นว่ามันเป็นอีกหนึ่งเอพิโซดที่ปุ้นตื่นเต้นมากนะคะพูดผิดพูดถูกแน่นอนเนื่องจากว่าวันนี้เราไม่ได้มาคนเดียวนะคะแล้วก็ข้างๆปุ้นก็ไม่ใช่พี่กระแตด้วยนะคะก็เป็นคุณแอนดรูว์ที่วันนี้จะมาพูดคุยถึงเรื่องประสบการณ์ในการลงทุนแล้วก็แชร์เรื่องราวเกี่ยวกับตัวเขามากประมาณนึงเนาะแล้วก็จริงๆปุ้นอยากให้เป็นเอพิโซดที่เราได้ lesson learn จากทางคุณแอนดรูว์ว่าอะไรที่เราควรทำในการลงทุนหรืออะไรที่เราไม่ควรทำในการลงทุนอะไรเงี้ยเนื่องจากว่าคุณแอนดรูว์เนี่ยเขาถือว่าเป็นคนหนึ่งที่มีประสบการณ์ในการลงทุนมาอย่างยาวนานและยาวนานมากกว่าพวกเราที่อยู่ตรงนี้แน่ๆเพราะฉะนั้นปุ้นเลยคิดว่าถ้าไม่เรียนจากคนที่มีประสบการณ์เราก็ไม่รู้จะไปเรียนจากใครแล้วจริงไหมคะเพราะฉะนั้นก็เลยขออนุญาตเชิญคุณแอนดรูว์มานะคะ Alright guys please welcome Andrew Stotz yay
Thanks for having me.
Oh, thanks for your time for having us. Thank you so much.
My pleasure.
All right. Before I start, I already talked about your portfolio, the All Weather Stratey, and even the Alpha Focus, and talking about the details of FVMR and each of the ratio on that models. Before we go into the models, I want you to introduce yourself and say hi to the audience first.
All right. So, hello to everyone, and thanks for having me on. And I'm excited to be here, and I'll explain maybe just a little bit about my background. I grew up in Ohio. I went to university in California at Long Beach State. And when I was 26 years old, I moved to Thailand. I didn't move to Thailand to work in the world of finance, but I studied finance. But I got a job teaching finance at university. For those people out there, you know, Mahavidyalai Hokan Thai. That was my first job in Thailand in 1992. In 1993, the stock market was booming, and I applied for a job at a broker. In that case, I got my first job at Tawanok Finance, and I started to work in the field of broking. And when I sat down at that job, I just knew from the beginning that this job is for me. I'm an analyst in my heart. I love to challenge, to question, to study, to think about things. And I've built a career in the world of finance over the past 30 years that has been really exciting. So that's a little bit about kind of my background. And I guess if I can explain a little bit more about how I came upon phenomena, also how I came upon you. How about that?
Okay. Yeah.
Okay. So first of all, phenomena, the people at Phenomena asked me to consider doing a guru report where I would take a strategy and bring it to them, and then they would allow their clients to trade in that. And I thought it was a good idea, so we started doing that. And that's how it all got started. And it started slowly and trying to understand what people needed and all that. And then it started to grow, over time as I really understood more. And I think what my foundation is to keep things as simple as possible, number one, and also to communicate clearly. If you keep things as simple as possible and you communicate clearly, it's been my experience that people are comfortable to invest with you. And of course, I've got a foundation of investing principles in me, but also it's really about, there's a lot of very, very smart people out there that don't communicate well, they make things complicated, and you may want to invest with them, but it just doesn't feel good. So I think my kind of principle is keeping it simple, right, and communicating clearly. And then maybe I'll just explain how we met. I have a course, I teach valuation. I've taught valuation. The first course I taught in Thailand is valuation. So I've been teaching valuation and how to value a stock for 30 years. And Kalpun was one of the students in the valuation masterclass. And, we didn't know each other at the beginning of the boot camp. It's a 6-week program. But by the end, we became close friends along with all the other students. And that's part of what I love about teaching my course, the boot camp, because I really have a lot of interactions with the students over time and to watch them develop. So that's kind of the story about, how we met.
Yeah, it's really a very transforming class. It's about transformation, and for you guys, it's not easy. It's not
And it's getting tougher.
easy. It's getting tougher every week, but it's worth it. From my experience, it's worth it. If you like finance and you want to get into the detail of the valuation, this is the 6 weeks that you get the real experience, and you have like a mentor to talk to you and trying to help you along the way of the valuation masterclass. I like that. If I recall, the portfolio with Phenomena is start in 2019.
I think that's correct.
That will be the
Yep.
year. All right. So I always talk to my client that before investing to the model, either all weather or alpha focus, you need to understand the principle, the FVMR model, because you're gonna know why you change or even adjust the percentage of the portfolio and even the asset class in the portfolio. Can you give us the history and how you developed this FVMR model? How did that come from?
So I developed it when I was working at one of the investment banks. In this case, my career I finished at Maybank, Kim Eng. And what I did there is I did the typical job of an analyst. I was picking stocks and building portfolios and recommending them. And I was using all of my skills as an analyst, but my portfolio wasn't really doing that well. And I thought, all of this work, and I'm not even really figuring out what's going to make the stock, how am I going to pick the stock that goes up? And so what I decided to do was to stop over the Christmas holiday and the New Year and decide that I would get data and start testing and asking the question, what did work over the last year, let's say, or the last 5 years? Was it PE? Was it high return on equity? What was it? And so that's where I started my business partner, Sornsak. And he and I just started testing all those things until we said, okay, this is the thing that can explain the performance of stocks over the past 12 months. Let's say it's buying low PE stocks. And that's really, we started to say, okay, that's the one. But hey, if you only rely on one measure, you can get in trouble because there's going to come a time where PE doesn't work. And it's more like growth or it's more like profitability. And so we broke these down into 4 categories: fundamentals, valuation, momentum, and risk. But we didn't think about them in that way. We thought about PE is part of valuation. ROE is part of fundamentals. And so we always thought about the underlying things, but I could see that I could communicate about what we were doing through FVMR.
อ่า
And what we did is very simple. We looked back over time and we got a combination. Like, what if PE plus a high ROE? What if PE plus a high ROE plus low debt?
อืม
If we combine these things into different, what would be the optimum group? Would it be, and we want to get like 7 different factors. And so we found the optimum group, and that just explained the past, right? That's all we did. We just
yeah.
explained the past. But I feel like you got to understand the past super well to make good decisions about the future. And then we also started running this portfolio, picking stocks, not funds, but stocks. And then we started looking at other markets like Philippines, and we found out, wait a minute, this doesn't work the same. It's a different 7 that drove the Philippine markets, and it's a different 7 that drove the Chinese market. And then we started to realize, like, okay, when you're managing a portfolio of all different countries, it gets a lot more complex. But the point is that we started it with being just kind of frustrated. And the other thing that's cool about it is that once we set up the system of how we test and look at it, then all we do is we say, okay, let's just say these are the 7 variables that we know are the most valuable. Then once a quarter or once a month, we stop and we look at every single investment opportunity using those 7 variables and then scoring it and saying, what is at the top of this list as the most attractive based upon these 7 variables? And that's where we start to do our research. And generally, we're going to be focused on building a portfolio of the assets or the stocks that appear at the top of that list.
So then any difference between stocks and funds using the FVMR?
Yeah. So one of the differences, stocks are much more volatile than funds or ETFs. Even though, you feel like, oh my God, my fund just fell by 15%, that's nothing compared to what can happen to a stock. A stock could go down 30%, 40%. In fact,
7%. Yeah.
a stock could even go down to 0 and be delisted.
อืม
So with stocks, we had to do more risk reduction techniques. And so that's where we decided to use a stop loss. And so we set a stop loss depending on the volatility of the market. We set a stop loss. So we build our portfolio using, let's say, roughly 7 factors. We say, okay, these are the stocks. And imagine one of those stocks is stock ABC, and the share price is, let's say, 100. We may set a stop loss at 70. If the share price goes down beyond 70, we're out. And it's not really, it's not easy to do with funds or ETFs because they just don't move so massively, and you end up getting bad signals, and you end up selling when really it was just a small move, and now it's going to go back up. So that's probably a huge difference. Also, a second difference is in our funds, we have gold and commodities.
อืม
And these are very difficult to value.
อืม
Whereas stocks and markets are easy to value or, relatively straightforward. So we have to think about new ways and different ways of looking at these things. Sometimes it's technical, so that's momentum. Sometimes it's understanding volatility of the asset class and if it gets more volatile, what does that mean for future performance? And that's the R, the risk in FVMR. So it definitely gets a little bit more complicated on that front.
I see. Gold and commodity is quite different and hard to value.
There's no cash flow.
อืม
So we value assets based upon the cash flow. And so you can't really value these assets in traditional ways.
And normally gold is for like asset allocation purpose, but is that the same with the FVMR?
Yeah, so basically gold has a principle in FVMR that the volatility of gold is very low compared to stocks, let's say, and the correlation of gold to stocks is also very low. And when the correlation of gold is low, that means that if stocks were to fall, then gold would probably not move that much.
The same
And
thing
so-
with commodity.
Commodities is different. Commodities moves a lot more like stocks, but it's the same thing with bonds. So right now, for instance, our portfolio has 5% gold and 5% bond. Very low allocation. We're heavily weighted into equities and commodities. Now, what is commodities? Commodities is a terrible investment. If you think about it from a long-term perspective, it's very, very hard to make money out of commodities. Why is that? Well, it's just a thing. It's an object that you're trading, right? It's oil, it's minerals and stuff like that. But where you really make money in the stock market is when you have a CEO and a management team of a company working so hard to make that company better. And that's when you own a fund that owns stocks, you are really owning a share in these management teams across the world. And nothing's going to beat that over the long term. No bond, no commodities, and no gold. That's going to always be the long-term winner because you have people that are working every single day to try to improve the profits and the growth of their business. And with commodities, you don't really have that. So the final thing I would say about commodities is that the correlation between stocks and commodities is very high. So therefore, the main time that commodities are good for a portfolio is when you think inflation is going to rise. And that's why we went overweight the commodities at the beginning, about a year ago almost, in AWS in particular. That's when we started to go into commodities. So we're in it for a short term. We'll see how much longer it lasts.
Wow. Okay. This is a long story of FVMR. How many years?
So let's say about 10 years that we've been
years.
working on it. And you can say the first 5 years were in stocks only, and now we've expanded it into ETFs and funds.
Okay. Wow. Interesting story. Normally I like to when I met people, like I like to ask about experience and lessons that they learn from their career or their life. Now, as a very experienced investor, I would say, any pieces of advice that you like to give to someone like me who just start and trying to build my wealth in the market, and anything I should do and should not?
I would say the first thing to realize is that the one surefire way of building wealth in the stock market is time. Nobody can beat that. If you keep your money in the market and you grow it over a long period of time, it's going to grow. So I think a lot of people, they get started late, or they're in and out of the market, and they're missing the opportunity. And so the second thing is all the gains that you make in the stock market, you need to reinvest into the stock market. And this is a thing that most people don't know. We all see the graph where you show that the value of a portfolio over time will grow exponentially. It only grows exponentially if you're reinvesting everything that's being produced in that portfolio. So if you ever take money out of your portfolio, you are damaging the compounding aspect. If you were to take all your dividends as you receive them out, you are damaging your compounding aspect. So I think time in the market, number one, and making sure that you're always invested over time. I think the third thing I would say is most people don't think about is risk management. And that, I think, is a critical thing. And when it comes to ETFs or funds, you know, we've talked about gold and bonds. Those are two very good diversifiers. And if you were only investing in stocks, you may say that you're picking some stocks that you think are really going to fly and they're going to go up 10 times. But some stocks you're buying because they're just solid, stable. They don't move that much. But that protects your portfolio over a long period of time.
Okay, that's wow, like a rule of thumb. 3 rules to follow in investment. Number 1, time is your best friend. It's your good friend. Number 2, always reinvest your money. Don't move that away. Don't withdraw your money from your portfolio no matter what. Number 3 is risk management. Some of the stock is don't just look for growth, look for some kind of protection for your portfolio as well. That's 3 lessons that I got from you. Oh, so valuable. Thank you.
Yep.
All right. Would be the last one. This is that question is so valuable. This one is about personal finance because I'm a person who like so into the personal finance. Any rule of thumbs you want to mention and talk about the personal finance, which is just a bigger part of the investment, I would say.
So I would say the first thing is most people, I like to teach people that we create and we grow money, and we create and we grow wealth, or we create and we grow value. Now, how do we create wealth? We do it by, first of all, if you invest in a business, let's say you have a family business and you run it successfully, you're generating wealth from that. But not everybody is a business owner. So let's just look at if you're making a salary. Let's say you're making 200,000 baht a month and you're spending 190,000. You're getting yourself 10,000. 10,000. Now let's just say that you reduce all that down and say I'm gonna spend 90,000 baht a month. Now you're getting yourself 110,000 in cash every month. That's a cash machine, just like a business could be. So I think it's very important to look at this cash machine as the origination of wealth. That's where you create wealth. Stock market is where you grow wealth. And that objective there is to look for a 6 to 8% return. You know, you could get higher, you may get lower, but a 6 to 8% return where you can grow that money over a long period of time. So my most valuable advice from a personal finance is that you've got to get your cash machine working well. So I do some consulting with companies to make sure they get more cash out of their business. But for individuals, I just say you have got to live deeply below your income. And when you do that, you are generating, you can think about cash that you're generating every single month is amazing. So we create money in our business or from our salary, and we grow our money in the stock market. Never go into the stock market thinking you're going to create your wealth.
Wow. Create and grow is the two main words that I got. So it's like having financial independence is quite simple. Getting from you just leave the less that you earn and then invest the less that you have, then and make it that a long time and repeat that cycle over time.
Make it work. And I would say 5-10 years ago, I didn't think about it that way. I focused a lot on, you know, if you really want to get rich, start a business. But the truth is that our salaries are our ATM, our cash machine. And if we get that cash and we put it in the market, then we are building our wealth.
Okay. Wow, so valuable lesson from you, like a person who have so many experiences. Thank you so much for having us, like talking and your time and everything and the advice that you gave us. I think it's so beneficial to the audience today. I'm gonna summarize in Thai on the comments and on the about the info box on the clip. You guys can check that out in Thai. I'm gonna summarize the keywords and the key points of this video, and also I'm gonna have the subtitle for this video as well. It's another valuable video. Thank you so much, Andrew.
Thank you, and say goodbye to everybody.
Bye bye สวัสดีค่ะ
สวัสดีครับ